Good evening, Bemo. Renier, goeienaand. Good evening. You are the first gentleman to join tonight. Hello, Monday and Morley. Please go ahead, folks, while you are coming online. I appreciate you joining us, number one. And number two, please do put in a question, anything with regards to financial advice, financial planning. Let me see if I can help you. Let me see if I can give you some insights tonight, some help, something that will make your life better. Good evening, Elena, and Tabani, and Asma. Good evening to all of you. I am sure as time goes on, we're going to have a lot more users. So if you want to get your question answered, be quick. Put it in now. Before it gets too busy and you have to wait like 15 minutes to get an answer. BF Millet, welcome back. I believe I've seen you here from before. Good evening, Ben. Oscar Twala, how's it, everybody? Oh, just want to make sure everybody sees this is water. TikTok has this thing. It keeps on warning me every time I drink something and it's not water or like this where you can see it's actually water, that it then starts warning me about displaying certain drinks. I think it thinks that you're having alcoholic beverages and it warns me against alcoholic beverages and it doesn't want to allow me to carry on, etc., etc. Anywho, let's see what we can do tonight. BF Millet says, wat verkies jy? 'n Lompsom van 46,000 of 'n debietorder van 3,800 per maand? Dit maak nie regtig waar vir my verskriklik baie saak nie. En die rede hoekom ek sê dit maak nie verskriklik baie saak nie, want R46,000, as jy 46,000, of kom ek stel dit so. As jy R46,000 belê vir 'n volle jaar, en jy kry 10% groei daarop, dan kry jy R4,600 se groei daarop. Maar as jy net R3,800 per maand wegsit, dan kry jy 10% groei op die eerste R3,800, so R380. Die volgende R3,800 sal 'n bietjie minder wees, want is nou 10% gedeel deur 12 maande, want jy kry dit nou net vir 11 maande. En so aan en so aan. So aan die einde van die jaar sal jy nie soveel geld hê in terme van groei op 'n maandelikse R3,800 as wat jy sal hê op 'n lompsom van 46,000 hê. Having said that, die bedrag is so klein dat op 'n kort termyn gaan dit nie saak maak nie. Dit gaan saak maak oor die lang termyn. Investing R46,000 per year as a lump sum or R3,800 per month, it's not really going to have a big effect in the 1 year that it is separate. And after 12 months, you've got R46,000 whether it was put in as a lump sum or R46,000 whether it was put in as a monthly investment. The difference in growth is going to be slight, but from year on, all the growth is going to be the same because it's 46,000 on both sides. So, Mr. Millet, I don't really care too much either way. I think if you really want to become technical and you want to look at absolutely best possible growth, then the lump sum is most probably the better option. I hope that makes sense. Oom Corneille, Vickers, Oom Corneille, what do you think about Franzel Financial Advisors? Vickers, I almost thought that you were the Vickers that I know. I have no idea who Franzel Financial Advisors are. Never heard of them in my life, never seen them, I have no idea. I cannot even try and start giving you an idea. Let me see if I can quickly Google them. Franzel Financial Advisors, is that what you call them? Advisors. Franzel Financial Advisors. I don't know. I see there is Franzel Financial Advisors in Rustenburg, and it is Franzel and Francisco and no, don't know who they are. See, there's one in Florida. See, there's Eldergrain or something. No, can't tell you. And you're going to have to excuse me for a second. My wife has just walked in. I have to say hello to her because she hasn't been home for a couple of days. Okay. Sorry, folks. Like I said, she hasn't been home for a couple of days, so I just wanted to greet her. So Vickers, I'm sorry, I can't really give you an answer. I don't know these people. I don't know how good or bad they are. And obviously I can't comment on somebody I don't know. Tabani Ndwalani, let's see. Is there an investment platform that can allow you to withdraw within 6 months yet still profitable? So this is one of those yes and no answers again. If you invest on a savings account, let's say you put your money into a bank savings account or a money market account, then obviously you start earning interest from day one. And therefore, should you withdraw 6 months down the line, you would have benefited, you would have had a profitable investment because you would have had interest for 6 months. Might not be much, but you would be better off than what you put in 6 months ago. Then the other option is to say, okay, let's rather make use of something like a direct unit trust investment or a direct share investment. This could potentially also work. What one has to take into consideration if you do something like that is, first of all, cost has to be taken off. So let's say your investment's 100,000 Rand and the cost on that investment is 2 or 2.5%. Your actual investment amount is not 100,000 Rand, it's now 97,800 because 2,500 Rand is being taken off as cost. Now the question is, how much growth does that portfolio or that unit trust earn in this 6 month period? And if that portfolio now shows a growth of anything above basically 3 to 3.5%, then once again it's a profitable investment because the investment growth was enough to grow back your initial cost plus give you some extra. So you're in a similar situation as with the bank. Only difference with regards to something like that is you could be better off or worse off than what you are in the bank. So Tabani, it's a yes and no answer. However, based on the investments that we do, I would not easily take a client's money and invest it for 6 months in the type of investments that we do, even though we make use of things like unit trust, which is absolutely 100% flexible and liquid. The other thing is, folks, seeing that we're on the conversation of that, what is a good return on investment? Let's say that 20% is a good return on investment. If you invest 100,000 Rand and you get 20% growth for the year, you get 20,000 Rand growth. So that's good. If you only get it for 6 months, you only get 10,000 Rand. So it's still good. But seen in the big scheme of things, the actual return that you get, even though you've had an excellent return of 20%, the actual return you get in monetary money is not very much. That's why when we talk about investments and when we advise clients on investments, we talk about long-term investments. We recommend that people think 5 years, 7 years, 10 years, preferably 20, 30, 40 years. Okay. Tabani, I hope that answers it for you, my good sir. Dolphin, Miss Leakey, Mikey, Lunga, Gustav, Magda. Yo. Lots of people coming in and out, quickly seeing what's going on and then sticking or going. Okay, PF Millet says, wat ek try sê is dit nie beter om maandeliks te belê om randkoste verspreiding te kry as 'n lump sum. Mr. Millet, so what you're talking about here is rand cost averaging, and Mr. Millet is asking, is it not better to invest monthly to get the rand cost averaging instead of investing in a lump sum as an original? So this is, I'm going to tell you why I don't really care either way with regards to this. Is rand cost averaging says This month I buy for 100 Rand 10 units. Next month I buy for 100 Rand 9 units because the unit is more expensive. The month after that, for 100 Rand I only buy 8 units because it's still even more expensive. Then the next month I buy for 100 Rand 11 units because the price has dropped and it's now cheaper. And in that way, the Rand cost averaging helps people over a long period of time with regards to their investments to actually negate the ups and downs of the market. So from that point of view, a Rand cost averaging is very good. But if we are talking this small amount, 46,000 Rand upfront versus 3,800 Rand on a monthly basis, unless there are major events that creates a drop in the market of 30, 40, 50% for a period of 6, 8, 9, 10 months. Once again, the difference between the lump sum versus the monthly investment and the Rand cost averaging that you would have gotten on that is not going to be a lot, especially not on such small amounts. So Mr. Millet, I think if we were talking substantially larger amounts and longer periods, then it might become a very crucial decision. But with all due respect, I do not really think over the short period of time, over the 1 year period, and that's basically what we're talking about here. We might be talking about investment that you are going to be invested for 20 or 30 or 4 years, no problem. But the investment period we're talking about that you're actually physically putting the money in is over a 1 year period. And over that short period of time, once again, you're not going to see a substantial difference in return on investment between the monthly premium and Rand cost averaging and the lump sum. Yes, it is very possible. It is very possible that you put in your 46,000 Rand and when you put it in, it goes from this point to this point immediately. 20% drop, substantial loss. And on the other side, you put in your 3,800 Rand per month and you also have substantial loss, but then recovery again. And it might look that this is going to give you a better return because of that. But it won't. It's only over the really long period of time that could have some sort of bigger influence. So no, I'm still standing by what I'm saying. Because we are talking about an amount of money that's only being invested over a 12-month period, it's not going to have such a big influence. The lump sum, 9 out of 10 times, are going to be the better return on investment purely because the lump sum has been in the investment for longer. I hope I'm making it clear. I hope that I'm explaining myself well. I don't know. Dump in whip, that was a good. Yes, I agree with you there. If you want to try and time the market, and you say, listen, yeah, I'm going to put this 46,000 Rand in now because the market is down 40% and I'm hoping that I've timed the market right. Yes, absolutely. If you've picked the right time and you've dumped in that 46,000 Rand at that stage, then yes, it's going to give you a bit of a better return. And over the short period of time, if the market recovers, you're going to smile because you're going to get a substantially good return on that 46,000. But now again, it's such a small amount over such a small term that if you were to compare that to somebody that invests their same 46,000 3 months after you and they buying at a high, so you've bought at a lower and now you've seen the market grow and the other person also buys 46,000 but he buys at a high, projected 20 years into the future, and there is going to be a little bit more for you than for him, but it's not going to be substantial or so substantial because of that first 3 months that you timed the market correctly. Okay, it is the time that you spend in the market that is once again and always going to prove how good that investment actually does. Thank you, PF Millet. That is very nice questions that you have just asked me. I appreciate that. Most van der Hoeven. INNet lyk my dis 'n mooi groei soos ek verstaan. So most van der Hoofen says it looks like INN8 has got a nice growth, as you can understand it. So we have to just get some clarity here on INN8. INN8 is the company. The company is called INN8, and within that company, it once again has a number of funds and portfolios where people can invest in. So the company INN8 provides you with a variety of different products that you can invest in, but inside of every product, you've got funds, portfolios, unit trusts, and it all depends on how well those funds or portfolio or unit trust inside of that investment, so the underlying fund, how well that is doing, will determine whether it's a good investment or not. So INN8 as a company has been a good company and has shown good returns, and if people are invested in their shares, they will have good returns. But the portfolios within that company that's used within those investments, you are going to get a variety of funds being low in return, medium in return, high in return. It's not all the funds and all the investments in that company that would show you this good growth. Okay, so I think as long as we understand that 100%, and INN8 is a very good company. I'm not 100% sure when, how, but I know that they have basically now merged, got into bed with Stanlip and so on, which I think sounds like it's going to be a very good move for both companies. Okay, let's see. I like reading all the names, but there's so many names tonight, and there's a lot of questions. Well, I think there's a lot of questions, so I can't spend too much time reading that. Pleasure, Tabani, pleasure. If I helped you, I'm glad. If it gave you something, I'm very happy. PF Millet, same to you, sir. It's only a pleasure. I hope that it gave you some insights and helped you. Bev says, can you draw a lump sum once in your life? Bev, when you're talking about lump sum, it depends on the type of investment you're talking about, okay? So, on tax-free investments, you can draw lump sums whenever you want. That's always available, always liquid, not advisable though. On unit trust, you can draw lump sums whenever you want. Always available, always liquid, not the intention again. On endowments, you can draw lump sums twice, 2 lump sum withdrawals allowed in the first 5 years. No more than that. After 5 years, more. Retirement annuities, no. You can't draw a lump sum unless you get to retirement. Then you can take your 1/3 in cash. That's the lump sum that you can get. Pension funds and provident funds, same story. While you're working for the company and you have your pension provident fund, can't do a withdrawal, can't do a lump sum. If you, however, resign from the company, then you can choose to take a lump sum. Once again, not advisable because you're going to pay tax and you're going to use pension fund money that you actually need for the future. So not advisable. So I've quickly run through all the different products and the options that you have. And as you can see, it all depends on the type of investment that you have, whether you can actually draw a lump sum or not. I hope that answers it for you, Beth. Thank you for the question. Let's see who's next. Lee says, can I send my CV? Oh, almost tried to drink and I can't. Lee, absolutely. Absolutely, you can send your CV. If you go onto my profile on TikTok, you will see that I've got a WhatsApp number there, as well as our website with an email address. You are more than welcome to send me your CV. Especially if you're a financial advisor, we need more financial advisors. And yeah, we will gladly look at a position for you if you are a financial advisor. And of course, if you fit in with our company, with our morals, with our mission, vision, and most importantly, our 5 laws. Wait, let's see who's next. Yeah. Interesting questions. I'm looking for 1 or 2 people tonight specifically because I need to actually speak to 1 or 2 people that normally jumps on Capable 110 says the stocks of Bafana are looking good. I don't know about their stocks, but I'm very, very happy that they won last night, and I'm very happy that we through to the first round. And from what I've seen, in terms of the bit I've seen of their matches, it looks like they're just improving. I mean, that first game against Mexico, oh man. Oh, I wanted to cry. I didn't want to admit that I was a South African football supporter. But next game was better against the Czech Republic, especially that second half. And then yesterday, obviously, much better. I'm sure they could have scored substantially more goals, but one is all you need. So yes, Bafana stocks is looking good. I'm very glad that we're through to the next round. Go boys. Daisy says, can a person in 40s take an annuity to say 1 million rand and collect a fixed amount for life? So when you're talking about an annuity, Daisy, there are two different types of annuities that one can take. The first one is a compulsory annuity. That's when you have to take your pension fund at retirement and get an income from that annuity. Now that can be a life annuity or a living annuity, but it's basically the 2/3 or at least the 2/3 from your pension fund, provident fund or retirement annuity, and you choose a certain income. Like I say, it's either a life annuity or a living annuity, and that then gives you an income for life. That's the one type of annuity, a compulsory annuity. The other type of annuity is a voluntary annuity. That's where you choose a type of income plan again, a guaranteed type of income plan, but now you are using your own money. You're using money that you've invested and saved in a savings account, a unit trust, an endowment, anything like that. It's money that you receive from somebody or from some institution where you've basically invested it. So if you are 40 years old, you can purchase an annuity that will give you a monthly income, but it must be voluntary money. It must be your own money that you've invested and now that you are going to use. If it is part of your retirement annuity, pension and provident fund, then you cannot use it yet. You have to wait until at least the age of 55. There are circumstances where you can actually buy a compulsory annuity with compulsory money, with this pension fund, provident fund or retirement annuity fund money, or even money from a living annuity. But that happens in only two situations. Number one, you have become disabled. Then the law allows you to make use of those type of annuities for income. Number two, somebody, husband, spouse, brother, sister, mother, father, whatever, close to you has passed away and they have beneficiated you on their pension fund or on their living annuity, and you are the beneficiary. Now, because that is already a compulsory annuity that's giving them an income, you can convert it into an income for yourself. Okay, so I've elaborated just a little bit because I think it's nice to know. It's maybe not that important for the question that you've asked, but it's nice to know. Okay, Daisy, there you go. Hope that helps. MB says, what percentage tax do you pay on the RS on retirement? So MB, there's no set percentage, my good sir, or my good ma'am. MB can wants to be man or woman. There's no set percentage of tax, and the reason why there's no set percentage is it depends on the income that you are going to get from that retirement annuity. Your income determines in which tax bracket you fall. So if you've got a small income of 5,000 Rand, you will fall in the 18% tax bracket, and that's what you'll get, or that's what you'll pay. You get a big retirement annuity income, big pension income of say 60, 70, 80,000 Rand per month, you fall in a 41% tax bracket. So the size of your retirement income determines your tax bracket. Over and above that, any other income that you receive, whether you are still working and you're getting an income from there, you've got properties with rental income, you've got interest that provides you with an income or could provide you with an income, any other incomes that you generate gets added to that income that you're getting from your retirement annuity, and that determines your tax rate. So you might have a retirement annuity that only gives you 5,000 Rand a month income, but you're still getting rental income from properties, and you're getting a salary, and you've got a large investment in the bank that gives you a lot of tax, and all of this gets added together, and now suddenly you're back up to that 80,000 Rand per month income. So although the RA is only giving you 5,000 Rand, but your total income is 70 or 80,000 Rand, you will now pay a 41 or 45% tax rate depending on the bracket. So that's how it works with the retirement annuities. There is no set percentage, and it's amazing how often I get this question. So MB, thank you for the question. You've allowed me to hopefully enlighten a few people. It's a pleasure, Bev. Anytime. Let's see, who's this? At ARP 007. I am 4 years from retirement, enough investments and policy. What can I think? I am 4 years from retirement, enough investments and policies. What can I think about? Okay, so I take it that you are telling me that in terms of retirement provision, you've got enough investments and policies to actually retire 4 years from now. What can you think about? Well, sir, I think all you can basically think about is to plan on an ongoing basis as to just to ensure that that funds is sufficient, so that when you eventually get to retirement, you can choose the correct product. So you can start looking at that already. You can start looking at the products that you would potentially have. But over and above that, if you are already in a situation where you've got enough, I mean, then you can really start planning your retirement. You know what income you're going to get. You know what you're going to need to spend your money on in terms of food and fuel and cell phones and everything like this. But now you can start really planning a good retirement and say, find a hobby that you like and say, well, can I afford to do this hobby? Can this hobby turn into another income, for example? So I think that's the nice thing you can think about, is how are you going to make your retirement the best part of your life, where you don't just retire and sit on the stoop and read your newspaper every day and have breakfast, lunch and supper and then go to bed again, but where you have an enriched and the full retirement, where you really have a wonderful retirement. I think that's what you can start thinking about. Too many people get to retirement and they either don't have enough, so they struggle in retirement as they were struggling in life, or they get to retirement but they have not thought about what they are going to do in retirement, and then they're stuck. I cannot tell you how many people I've spoken to that got to retirement. They said all they want to do is they just want to rest. They don't want to do anything, they just want to rest. And I say, good, take a month and rest. Make it the longest holiday ever, but then start doing things. And then when I do speak to them again 6 months or a year later, they are still sitting at home, but you can immediately see that, I almost want to say that they've lost the will to live, because there's nothing to live for. They literally get up in the morning, do the same things every day. There is nothing to live for. They have no excitement in their life. They have no drive. They have got no goals, nothing. So I think that is absolutely crucial in retirement, is that we do not just go into retirement and go and sit and do nothing, but we find some things that we do. The things that you wanted to do all your life and you couldn't. Now's the time to do it. Now's the time to go and really live a full life. And it's important to do that, but because it's been proven scientifically, and in what I've seen personally, it's been proven that people that just retire and they've got nothing to do, they kind of grow older quicker and become more grumpy. They become more sickly. They just have no quality of life, and they die sooner. Where people that actually retire with goals and hobbies and stuff like that, they live a fuller life. They are wealthier, they live much longer, they've got a much better quality of life. Okay, I hope that was maybe a bit more than what you expected, and maybe I didn't even answer your question, but I'm passionate about that stuff. Oh, and there it comes, to further invest in. I think if you want to invest more stuff, find somebody that can do a planning session with you to determine what will be the best investments for you going forward from a tax and a growth point of view, seeing that you've got enough already. And that planning needs to be done in association with your retirement planning. So I cannot give you a straightforward answer, but if you have enough of everything, I would think that the best place would be either an endowment or maybe a combination of things where you maybe go a little bit alternative as well. But yeah, a good planning session with a financial advisor that basically deals over the broad spectrum could be to your benefits. Daisy, it's a pleasure. Good info, she says. Thank you. It's a pleasure, Daisy. Where did I see Antoinette now? Oh, Antoinette Dubel. Okay. I had a call from another Antoinette today and I couldn't take it, so I still need to phone back. Lynn Abrams says hello. Hello, Lynn. Welcome. MB says thank you. It's only a pleasure. Ob says correct. Thank you, Ob. It seems like I did answer you to a certain extent. Gareth says, can I get all my money from my provident fund if I was dismissed? So Gareth, if you are before the age of 55, yes, you can indeed withdraw all your money, although I would definitely not recommend it because you're going to pay substantial amounts of tax. Having said that, there is a second portion to this answer, and that's to say that in September 2024, the dreaded two-pot system came into being. I dread it, I hate it. And the two-pot system said that although you could always access your provident funds, everything you pay into the retirement pot part of your retirement fund now, plus all the growth there, you cannot withdraw anymore. That is the one good thing from the two-pot system. It is now saying that cannot be withdrawn. So there are certain limits in our industry that says if that portion is less than, I think it's 147,500 if I'm not mistaken, then you can actually access that as well. But if it's not, then that portion you cannot draw. So they go and look at your full provident fund and they say everything contributed from September 2024 until now plus growth, 2/3 of that cannot be touched unless it is less than a certain amount. So that's why I say it's a bit of a two-point answer, because theoretically you can say I want to draw all my money, but practically you might not be able to do that. And Gareth, I hope you have not been dismissed, number one, and number two, if you have, please do not withdraw your money. Mate, sit down with somebody, do some planning, get different opinions, but please don't draw the money, because it's maybe of help now, but the amount of heartache and financial stress it brings into the future is, I cannot even explain to you. Lynn Abrams says, hello, tell me, a person who's 54 and doesn't have any retirement policies, what do you suggest? Well, Lynn, what I suggest is that you start investing in something. I don't care in what, but just start. That's the first thing. You should have started 30 years ago. You haven't, so now you're behind the black ball. So start. Second thing is work longer. Try and work until the age of 65 or even 70, because you're going to need money at some point in the future where you cannot work anymore. So make use of the productive years that you've got left. And number three, I would recommend that you seriously start reading books on self-improvement. Books that helps you think differently and maybe awaken something within you to help you to start an own business, for example, or to make sure that you don't get into debt, to start making some provision. That's what I would recommend. It sounds ridiculous, but the truth of the matter is that in today's life, there are more people starting successful businesses after the age of 55 and making more money out of that than what they've ever done in their working career with the companies that they worked with. Because more and more people is converting their passions, their hobbies, into something that brings them financial gain, that is a business and becomes a viable business. So people very often get to the age of 54 and they think, okay, well, I can't do anything. There's not enough time left. Please don't tell yourself that lie. There is plenty of time left. And there's plenty that you can do. It takes a willingness to have a mindset change. That's what's necessary. I hope that has helped you a little bit, Lynn. All the best to you. Daisy says, sounds like my life and I'm not even retired. Not sure which one you're referring to, Daisy, but good. Do the same thing every day with no excitement. Daisy? Oh, okay, I see now what you're saying. Sounds like my life and not even retired. Do the same thing every day, no excitement. Daisy, if that is the situation, then do make some changes. Go out and make some changes. If you're doing the same thing every day with no excitement, find something to get excited about and do it. Here's a suggestion for you. I know people don't like exercises, but if you are not training at the moment, if you're not doing any physical exercise, do one thing. Go and join a running club, a bowling club, a gym, anything like that. Become a little bit physically active. And I promise you, if you do that and you open yourself enough just to say hi to somebody that you've never met, you will find very quickly that you build up a new set of friends with new ideas, new passions, and you can actually start becoming excited about different things in life. So go for it, Daisy. Gee, it seems like tonight I'm giving more life advice than what I'm giving financial advice. Any guys, let's see. How much tax of 625,000 as a 1/3? So let's have a quick look at it. Assuming, PG, that you have never taken any cash as 1/3 from any other retirement annuities, pension funds or provident funds, then the calculation is pretty straightforward. It's 625,000 minus 550,000, because that's the tax-free portion. So you're left with 75,000, and you're going to pay 18% tax on that 75,000. So on 625,000 Rand, if that is your 1/3, if that's the cash amount you're taking, and if it's the first cash amount you're taking from pension funds, 13,500 Rand is going to be the tax that will be deducted from the 625,000. Okay, PG? Thank you for making that calculation easy. I hope nobody asked me for a bigger calculation, because I did not bring my little book with the different tax brackets, so I can't do the bigger calculations tonight. Colleen France says, Liberty Life or Discovery for RA? Oh, Colleen. I don't really want to answer your question, because I do not prefer either of those companies. They are both very good companies, Discovery and Liberty. But I just do not deal with them often enough to make a recommendation or to tell you this one is better than that one, this one's portfolio is better than that one. So although I have contracts with these companies and although I do business with them, I cannot even venture or try and give you an answer and say, listen, this company above the other. And it's all, what do they call it? I think they call it suggestive. Because if you had to have 10 or 100 financial advisors or people standing next to each other and you say, okay, which is the better company, Liberty or Discovery? If it's, I promise you, the equation is going to be about 50-50 with people that pick the one and or people that pick the other one. Discovery, more people might choose because Discovery, they are more in your face in terms of their marketing and their advertising. That's what they are absolutely brilliant with. So it's very possible that if you look at the two companies purely from a recognizable point of view, or for the point of view on how they market themselves, then people most probably look at Discovery first. But I think both companies are good. They both have good products. I just do not do a lot of retirement annuities with them because I prefer to place my retirement annuities for my clients with other companies. And fact of the matter is, I think it will be unfair for me to pick sides because it will be my personal choice or my subjective choice, which could be completely wrong, especially if we look at the fact that the retirement annuity and the company with which you take that retirement annuity is not the thing that should be the deciding factor. It should be the underlying portfolio once again. It's the portfolio you choose in that retirement annuity that will actually determine whether it's going to be a good retirement annuity or not. So it's kind of the following. You can take a retirement annuity with Liberty and you can take one with Discovery. So it's exactly the same product. But inside, the portfolio that you choose might be the Allan Gray Balance Fund. So although your investment is with Liberty and Discovery, your actual growth is determined by Allan Gray. It's not determined by Liberty or Discovery. And that's the thing. It's the underlying fund that you choose that actually will determine which RA is going to be the better one. So if you choose Liberty and you take Liberty Balance Fund, choose Discovery and choose Discovery Balance Fund as an example, then it's going to the best RA is going to be determined by those two funds, which one performs the best over the period of time. Okay, and nobody can predict that. So I hope I've answered you without answering you. Sorry, Caleb. Lynn Abrams says, sorry, thank you. Where can we save? Lynn, plenty of places. I'm working 9 years, nothing to show for it, no problem fund, absolutely no company benefits. So Lynn, where you can save, there's plenty of places. We just mentioned two companies here, Liberty and Discovery. There's Momentum, Allan Gray, Marriott, Investec, 10X, Sanlam, Momentum. The list goes on and on and on and on. You can invest with any of those. What you need is you need to sit down with a financial advisor to help you plan and then help you choose the right investment with the right company. So that, my dear Lynn, is what you need to do. Daisy Daisy says, good advice. Thank you, Corneille, Life Advisor. Oh, well, I'm glad that if I'm glad I could give you some life advice. Maybe I can get myself qualified as a life coach over and above a financial advisor. That might actually be nice. Thank you, Daisy. Thanks for the comment. Next one here is Robin Sophia. The life advice is the financial advice too. Yes, it is. It is actually. It is. At the end of the day, you're right. Life advice is the financial advice too, because it doesn't help for me to help and give a client financial advice on how to have all these millions of rands when they get to retirement and say, oh, you've got plenty of money, you can do whatever you want. If we have not discussed what are you going to do with it, what are your plans, or if you have not made any decisions with regards to that, then the money means nothing. That's the honest truth. I think people are so concerned sometimes in building up enough wealth and capital that they forget the more important things is, what am I going to do with it when I get to retirement? How am I going to spend it? How am I going to live basically after retirement? Nesh says, great, the financial therapist. Oh my goodness gracious, folks. Tonight I seem to get a new, what do they call it? Almost I would say, a new title. Tonight I'm getting a new title. I wonder if I can add it onto my signature. And yeah. Hey Graham G, I owe you an answer, sir. I'm glad to see that you on here tonight. I owe you an answer. I haven't forgotten. And Graham, since I'm seeing your name and seeing that I have not given you an answer, I just want you to know that I have asked several companies for the calculations that you've asked for, and nobody is willing to give me calculations. So I don't know if it's because they can't or because they're just scared to do it, but yeah, I do not have any calculation. I'm going to have to work my own calculations, same as you. In any case, let's move on from the people that's calling me all these wonderful names. Kaylin says, thanks man. Tev's World says, what platforms would you suggest to buy stocks or shares? So I do not deal with stocks or shares, okay? So I don't really make any recommendations with regards to that. I know that you can go into something like easy equities, you can go into things like, what do they call it? OMQ, that Old Mutual launched a few months ago. You can go into your bank app and you can open a share account. So there's a number of places where you can go and you can actually open a share account and start buying and selling shares. The thing is with all of these is it's platforms where you are not getting advice. You make your own decisions when you buy and sell shares there. So there's plenty of them. Literally, go into your banking app, go into EBQ, go into Easy Equities, and you will find it there. I can only help a person that wants to be invested in shares if they've got 5 million rand or more to invest. Then I have access to a stockbroker that I can invest my client's money through. If it's less than that, I can't assist. And the plain and simple truth with regards to this is, if you've got less than that, it's difficult for a stockbroker to go and pick shares for you. Because, I mean, if you've got 100,000 rand to invest, then today, if you want to buy, I'm not sure which is it now, Nvidia or Tesla or Microsoft, it might be all of them. You can't even buy one share with that amount of money. You can only buy a piece of a share. So for somebody that doesn't have that type of money, that does not have 5 million rand to invest and to buy shares with, you are going to either buy small cap shares, which is very often not blue chip shares, which should be part of your share portfolio. It's very often not that, or it's very often that you're only buying one share. So there's no diversification. So if that share collapses, you collapse with it. So the stockbrokers I deal with, they say, if you've got 5 million, we will do a share portfolio for you. Because now we can go and buy several different shares. We can build a share portfolio for you. And we can go and buy some of these shares that are doing really well at the moment and are really valuable at the moment, that are worth hundreds of thousands of rands. So, Trev's World, if you want to buy and sell shares yourself, then I suggest you go to one of these local platforms and you start playing around there. But if you want to really make use of a share portfolio, get together like 5 million rand and speak to me again. Okay. I know it sounds terrible. It sounds like it's only for the rich and famous. It's not. But it has to be put into perspective. There is certain levels with regards to investing. Kaylin France says, I'm 35, starting a tax-free investment this year. What till I have, I think what you're asking, Kaylin France, is what will I have by the age of 65? Now, Kaylin France, that's 30 years of investment, and I am not even going to try and give you an answer because I need to do a calculation. And it's going to be difficult to go out and get into my program and do the calculation there. That's the first thing. Everybody is sitting here and they want to hear what I've got to say. They don't want to see me sitting here doing calculations. So, Kaylin, if you want an answer, you are welcome to send me a WhatsApp or an email with the question. I'll go and do the calculations and I'll send it on to you. But this is the thing that you have to remember with regards to that tax-free investment of yours. I don't know where you are investing. I don't know if the investment that you're doing is just an investment that's giving an interest rate of, say, 6%, or whether it is a portfolio that's potentially or could potentially give 14%. So there's a big difference between 6% and 14% over a 30-year term. So I can give you these two extremes and I can say this is what you could expect in 30 years from now at 6% and 14%, and anything in between is possible. And that's the problem. People want to know how much am I going to have in the future. So if I tell you you can have anything between 3 million rand and 30 million rand, does that mean anything to you? No, because the one amount is okay, it's 3 million. The other one is fantastic, it's 30 million. But you still haven't told me how much I'm actually going to have. It's because I can't tell you how much you're going to have because I don't know how well your portfolio is going to do into the future. I can only speculate. I do not have that crystal ball that's going to tell me the exact growth you're going to get. So even if I do a quotation for you, Kaylin, on your tax-free investment scenario, I'm just going to give you parameters. I'm not actually going to give you an actual figure you can look at. The thing that people must understand with investing, the amount of money that you get at the end of the day should not be what you're looking at. You should not be looking at 30 years from now, I want to have 50 million rand. That's not what you should be looking at. Forget about the amount. What you should be looking at is my investment. I want to beat inflation. Do I want to beat inflation by 1 or 2% just to keep the value of my money? Or do I want to beat inflation by 7 or 8 or 9% and really see exponential growth? That is the question you have to ask yourself. And that question is only answered when we know what strategy you choose with your investment, because your strategy will determine the portfolio or the investment you're going into. And that will determine that when you get to your end mark 30 years down the line, whether you've actually beaten inflation by 1 or 2% or beaten inflation by 7 or 9%. And then when you get to that point that day, it's not going to matter whether it's 10 million or 20 million or 30 million that you've got in that investment. The investment value at that day will be enough to do what you want to do with it, because you have beaten inflation by enough on a yearly basis. Okay, Kaylin. So once again, you're welcome to send me that WhatsApp or email. I'll do the calculation. I'll send it on to you. I'll give you the parameters, but it's really not going to give you the answer that you want. And I know that because that's how most people ask their questions, and giving them a random amount never tells them what they can actually do with that random amount. The intention is to say, okay, the future value is going to be 60 million rand. How much is it valued at today? What is the value in today's term? 60 million, then value 10 million today. What can I do with 10 million today? Because that's what I'll have in that time. That's the actual question. Any case, I hope that helps a little bit, Kaylin. Jovi Bocello, it seems like you might be the last question for tonight because I see it's 5 minutes to 7. So let's see if I can assist you. Do you think investment education should be a compulsory module for university students? Oh, my man, I love your question. I think that it should not only be a compulsory module for university students, I think it should be a compulsory module for children that goes to school. You know, I started working when I was 12 years old. Now I'm giving away my age here. I started working when I was 12 years old. I started delivering telegrams, which I think most of the people here won't even know what that is anymore. I started delivering telegrams for the post office to make pocket money because my parents couldn't afford to give me pocket money. Okay. I worked from then every year until the age that I am now. I was always working in school to work for my own pocket money. I was changing jobs to get more pocket money, but I was working all the time. I came out of school. I wanted to go to university, but there was no money for university, so I never went to university. I started working in the bank, and then I started working at Old Mutual, and then I started my own brokerage. I was 28 years old when I started my own brokerage. Personally, I only really learned how to start working with money properly when I was in my early 30s. So, what I'm trying to say, as a financial advisor, not learning from the age of 12 to the age of 32, for 20 years, I was making the most stupid financial decisions of my life because nobody taught me how to work with money. Nobody. My parents didn't know how to work with money, so they could not teach me because they were making the same mistakes as their parents and their parents and their parents. So for me, I would say I would love to see that educating children on investments and economics and stuff like that should be compulsory from a very young age. If it's not primary school, in grade, what do they call now? I know the standard 3, 4 and 5. If it's not grade 5, 6 and 7, then do it compulsory from high school. And it doesn't even have to be a subject where they have to write exams. It must just be a subject that teaches basic financial savviness, how to do a budget, how to work with a budget, how to make provision for the future, etc. So Joey Bocello, there's my answer. In short, yes, I believe it should be compulsory. With that said, folks, thank you very much for, I see there's a couple of minutes, but it seems like a lot of people has left us already. At some point tonight, we had 80 people on the live event. Now we're down to 31. I think the problem was, Joey, when you asked your question, nobody wanted to know, nobody wanted to hear that they don't know how to work with money and they should be educated. I think that's why there's only 30 people left. Anyway, guys, ladies and gents, thank you very much once again for a very entertaining and fun Thursday evening. I hope to hear from a lot of you. I hope to see a lot of you. I hope to see you back next week, Thursday. Go and have an absolute blessed week. And I'll chat to you next week, Thursday, which I think is going to be the 2nd of July. All the best. Keep well. Bye-bye.